Welcome back to another Old Mutual Wealth Coffee Chat with, as usual, Tiaan Herselman, Head of Old Mutual Wealth Advice and Proposition Marketing, where today we look at the ever-increasing popularity of hedge funds in the local retail investment market. We've seen this grow exponentially from about 6.2 billion in 2023 to reach the 10 billion mark in 2024. Tiaan, why would financial planners use hedge funds in their clients' portfolio?
Well, first of all, Dave, it's good to be back. It's good to have our coffee. And hedge funds is quite an interesting topic, and it's gotten a lot of traction, like you mentioned in your opening. And I think the one thing about hedge funds, why we're looking at launching our own solution on the retail market, is that they're a powerful way to actually help diversify client portfolios because the returns they deliver aren't closely tied to traditional assets like equities or bonds. This actually means that they can help smooth returns in tough markets, and they also offer asymmetric returns, which basically means they aim to limit the downside while still also capturing on the upside. For your clients, if you are a financial planner, this can actually provide better protection during volatile periods, so like your 2008, your 2020, the start of 2025, while delivering superior risk-adjusted returns over time. And I think that's why hedge funds are a great solution to consider for a portion of clients' capital, specifically those in post-retirement assets.
That's interesting, Tian. And also, of course, we know that multiple hedge fund managers can make use of leverage where they're borrowing money for additional returns. They can also short the market as well, which is different to sort of traditional fund managers. But why would you look at the Old Mutual multi-manager hedge fund solution? What makes it different or stand out? And a two-point question, can you use it in retirement portfolios?
Dave, that's actually a fantastic question. And at our mutual multi-managers, we've been managing hedge fund solutions for almost 20 years or more than 2 decades, and mainly for institutional investors. It's actually one of our best kept secrets in the market. And over this time, we've actually built a proven track record and won numerous industry awards. In fact, we've been recognized at the Hedge Fund News Africa Awards every year since 2013, and most recently named the best fund of hedge funds over 5 years on a risk adjusted basis in 2024. Now, for the first time, we're bringing that institutional expertise, that track record to the retail space with our new fund of hedge funds launched in December 2024. This fund offers a moderate risk profile with a focus on capital preservation and targets STEFI plus 4 over rolling 3-year periods. This fund is designed to deliver asymmetric returns, which in simple terms just means maximizing upside while reducing downside risk. And you can access the fund via the Old Mutual Wealth platform and through our DFM model portfolio solutions. To answer your question, Dave, who is this solution for? It is a great solution specifically for our living annuity clients wanting to manage their drawdowns and reduce volatility, specifically in retirement where sequence risk is a big issue. Secondly, it's also a great solution for clients saving for retirement, with now Reg 28 allowing up to 10% allocation to hedge funds and up to 5% of that in a fund of hedge funds, double the limit of a normal single hedge fund. Now, most importantly, and I think this is the one thing we want to leave our planners and clients with, is that this fund gives you and your clients access to a diversified blend of hedge fund strategies. So you're not just picking one particular fund in the market without the complexity of having to blend managers and strategies yourselves. So we utilize our research and expertise to put together a hedge fund solution, a blended solution of different hedge funds that meets your clients' needs.
Now, Tian, in the past, previously, financial planners have been reticent to get involved in hedge funds because of the complexity. And now you add this layer of the Old Mutual multi-manager hedge fund's ability to actually pick the best hedge fund managers. What have you done to demystify this? Because I guess that's one of your superpowers that you have out there.
Well, I think that's the great news about the solution and also about Old Mutual multi-managers and our DFM capabilities is that we've done the heavy lifting for you, the financial planner. Our fund gives your clients access to 5 carefully selected fund managers, each with their own proven track records and strategies that are uncorrelated, particularly in, most importantly, down markets, because that's where hedge funds really do well. So to give you an example of these managers, we have Marble Rock. They are experts in fixed income and commodities, both locally and globally. We have All Weather Capital, which I love that name, All Weather Capital. It's there for a good day and on a rainy day. They are a market neutral strategy aiming to deliver returns regardless of the market direction. So it doesn't matter who's in the White House, they keep on delivering for us. We have 36-1, a long short equity strategy, taking advantage of price differences between stocks. We have very well-known brand, Peregrine. We've used their high growth fund, a multi-strategy fund with an equity bias, looking for high growth opportunities. And then we have another one, I love this name also, the Oyster Catcher. This is another fund with it's a long short equity fund, but more aggressive, and it aims to outperform the All Share Index. So we allocate to it a bit more selectively when compared to the other funds. But by investing in our fund of hedge funds, your clients get the benefit, Dave, of diversification and risk management in an easy to access solution on the Old Mutual Wealth platform, which is backed by all of our DFM and multi-manager research and expertise.
Yes, but Tiaan, there are more than 30 hedge funds out in the South African market currently. What makes this retail fund of hedge funds so compelling to financial planners and their clients?
Dave, that's another good question. And I think you're full of good questions in 2025. It's going to be a good year for you, I think, and for all of us. I think at its simplest format, our fund of hedge fund solution aims to deliver returns in line with or even potentially better than some of the top hedge funds in the market, but most importantly, with a lower amount of volatility. So, lower drawdowns or low volatility makes it the ideal solution for living annuity clients, helping to manage sequence risk, which is one of the biggest risks for retirees as they enter retirement, and help them preserve their capital. And it's also a great diversifier for pre-retirement portfolios, offering consistent returns with less downside risk. And that could even be optimal for clients wanting to make sure, if they want to make sure they're preserving capital in those last couple of years before retirement, they can do that. So a great solution pre-retirement, a great solution post-retirement, but specifically good for managing downside risk and volatility.
Now, Tiaan, I'm going to put you on the spot here. And as usual, you always make it practical for financial planners out there. What is the optimum allocation to it?
David, it's not an easy question to answer. And our view is that in determining the optimal allocation to hedge funds, in specifically a living annuity solution for South African investors, involves balancing the need for downside protection with the goal of also achieving better returns and growing capital. So we think it's a balancing act between balancing the client need for diversification, risk tolerance, market conditions, and their investment goals, and that will ultimately determine the allocation. While we don't think there is a one size fits all answer, we believe in a balanced approach, which typically involves allocating around 5 to 15% of the portfolio to hedge funds. This approach has really worked well. I think it's particularly the last decade where we've seen a lot of volatility in both local and global markets, and this can provide significant downside protection and enhance returns without significantly increasing risk in a client's portfolio. Now, our DFM team are currently running a range of off-the-shelf portfolios as well, in combination with this hedge fund solution that we put together, our fund of hedge funds. And these portfolios we put together also have an allocation to hedge fund solutions for both pre and post retirement clients. But for a more bespoke solution, the Old Mutual Multi-Managers DFM team will work closely with your practice to blend these solutions to meet your client's specific needs, making your job as the financial planner easier while delivering better outcomes. Because what we are here for is hopefully to help you grow your practice and simplify financial planning for our clients, for our financial planners, amidst all of the noise in the market.
Well, as usual, thank you, Tiaan, for demystifying hedge funds, the role they play in clients' portfolios, and the role that Old Mutual multi-managers can play in that type of solution. Join us again for another Wealth Debrief Exchange.